Hi, I'm Mr. Simons, and in this video we're going to tackle one specific issue. We're going to look at the stances of monetary policy. If you are wondering about what monetary policy is and who the Reserve Bank of Australia is, I'd encourage you to start with some of the other monetary policy content, and I'll put links to the description below. But for this video, we're going to just look at this one specific issue. What are the stances of monetary policy? So if we start with this idea of a stance is like a position. So you can take a physical stance, you can take a philosophical stance. It's your position on something. So for example, I'm kind of big on basketball, and in basketball, there's something called a 3-point stance, which is where you've got your ball on the side with your dominant hand, and you can shoot, you can pass, you can dribble. You can do all of these things from this particular stance. If we travel back to the world of economics, that the RBA has two main stances it can take in terms of monetary policy. So in terms of changing the cash rate to then affect the general level of interest rates and the Australian economy. So if we think about these two stances, we've got an expansionary stance and a contractionary stance. And it's kind of like it sounds. If I've got an expansionary stance, the key word is to expand, to grow. And we're not talking about the cash rate on that, we're talking about the economy. So likewise with a contractionary stance, we're talking about contracting, slowing, getting smaller. And that relates to the economy as well. Let's go through this. So if we talk about an expansionary monetary policy stance, the RBA is trying to expand or grow the economy. So it's trying to speed up aggregate demand, get people spending, borrowing, investing, increase GDP and economic activity. In order to expand the economy, the RBA is going to be reducing the cash rate to reduce the general level of interest rates and to speed up the economy. So expansionary stance, a lower cash rate, lower general level of interest rates. If we then flip the story and think about a contractionary stance, contract, smaller, slow down. So to do that to the Australian economy, the RBA will be raising the cash rate, which will then lead to a higher level of interest rates across the economy, less spending, less investment, less growth, hopefully less inflation as well, and therefore a slower contracted economy. An expansionary monetary policy stance, that's also known as kind of like a loosening or easing of monetary policy because the cash rate is falling to try and speed up the economy. If we think about the contractionary stance, another way of explaining that is the tightening of monetary policy to raise or ratchet up the cash rate to try and achieve the RBA's goals. And that's really the point of stances. It describes what the RBA is trying to achieve. Is it trying to expand, or is it trying to contract the economy through its use of monetary policy, the cash rate influencing the general level of interest rates, and so on. Okay, so hopefully this was pretty clear as a concept in this video. Any more information that you need on monetary policy, the role of the RBA, plenty of videos on that. So just check the links in the description. And as always, thank you very much for watching.